Okay, so in a range environment, what do we do? The prospect really here is all about, we're going to be in a boxed range, either flat or, like I told you, maybe a little bit cascading upwards, and maybe even a narrowing range that can come out of it. So the whole idea is buying support, selling towards resistance. And the trick to doing this is this way. It is preferable that if you're going to buy closer to support, you do it after it bounces from support, not before. Because you want evidence that the price is telling you, okay, I'm stabilizing here and I'm going to try to be able to recapture my advance. If you buy it on the way down, you could be that exceptionally lucky individual who happens to buy the support, just happens to break. Right? So you wait for prices to rebound of support. Yes, you might sacrifice a few points. And yes, you might not to buy the absolute low. Ladies and gentlemen, I'm not here to teach you to buy the absolute low. I myself cannot do that. All right? The idea is to make sure you're buying near enough the low, but you're buying a little insurance policy to make sure that hindi yan masisira. Because if that support breaks, the cradle will fall. And you know what happens when the cradle fell, right? And so try to protect yourself in that manner. Second, when you see prices rallying towards resistance, do not wait for resistance to stop you. As it gets closer to the range highs, lighten down. Don't sell everything. Lighten down. So you buy on the rebound, sell it as it comes closer to the top, but you keep some. Yan yung baon mo, just in case tumuloy. If it doesn't, that's when you sell the rest. And the reason I want you to do it that way is because normally the people who wait for resistance to block the price, on the day that things start to turn down, it will fall down fast, the volumes will run away, it will be very hard for you to get out a meaningful position out in a reaction. So dapat mauna kayo. On that way up to resistance, you toss the position out already. Take half out if you wish. Keep some or half. If it happens to break out, that's a new trend. Engage a new strategy. All right? That's the way you would do this. Second point. Please only trade ranges that are large. The size of a pattern is meaningful. If, for example, you're looking at a range of, let's say, you're buying a 10 peso stock and the range of it, the high and low, is 2 pesos in size of a 10 peso stock, that's a 20% move. And you can clearly make money buying the low and selling the high in a case like that. But let's say you have a range, and your range is from 10 pesos to 10 pesos and 30 centavos. Can you make money? Buy at 10, sell at 10.30. Can you make money? I can. Who's I? Who's I? The broker. Okay, not you. That's very hard to make money in the size of that range. So it has to be a wide range for you to range trade. Third, please don't ever leave home without it. You must have a protective stop. It is a tool that you will put into the supportive element, the bottom of your chart. And if somehow that range breaks, you have to learn how to cut your position out. If a stop leads to a loss, you'll just have to be, adult enough to be able to take that. Sometimes, losses here have to be taken to prevent a big loss. I think Lawrence presented a very clear case of that earlier on. Earlier, I talked to a lady who met me outside. I will not say who she is, but I think her story should be told. She met me, not exactly sure how many months ago, or was it a year or more ago, and she was in a predicament. She bought a particular stock that kept on going down and down and down and down. No, it wasn't CHP. That stock did not want to reverse, no matter how well it went through. It was double digit, it's now single digit and counting. And my advice to her was, as hard as it could be, I told her, the best thing for you to do is to switch that position out. It's not making money for you. There might be something wrong. It could be underlyingly a reason why the stock is sliding. Now, you don't have any control of that vehicle anymore. You're in a car, someone's doing the driving, and you can't somehow stop it. So if you want to be able to rectify this position, the very first thing you do is stop the bleeding. Because it's the bleeding that creates an unstable mind. A trader cannot recover while he's wounded and bleeding. So the first rule, stop it. Put a patch on that. Sell that position. At that moment, it might be hard. But the minute you do it and you transfer it to something else, that notion of grief becomes hope. A better sense of it. Because now you've realigned yourself to something better that can recover itself. And I was glad to find out. She approached me earlier on, and she said, "Thank you for telling me to switch. I've switched it, and fortunately, I switched it at the time the market was coming from a low, and the issue she bought is recovering faster than that other one that she had let go, even up to today." A hard decision, but today, at least her life has improved because of that. And so here, it's the same thing. You have to learn how to limit your losses. Trading is all about that. By putting yourself in the right condition and making sure, just in case things go wrong, you've limited the impact of that damage on you. So here's an example of a big range. Here's a stock going up and down, up and down. Now remember, the whole proposition here is to try to get yourself buying at the lower bands of this range and try to sell it closer to the top end of this range here. While that pattern is in effect, your mind should be fixated that this is a range and I should treat it as a range. I don't want you to be that person that every time it goes up to the high band, you're going to say, "Oh, ayun na, mag-breakout na siya." So if it does that 6, 7 times, and there you were, as the prices are going up, you didn't sell it because, no, this is it, the chance of a lifetime, it's going to do it now. And then it turns down. Your mind is fixated on holding the stock because you think it's going to break out, and you're not doing what you're supposed to, taking that profit. You entered the transaction, you entered the trade thinking it's a range, and when it finally gets to the upper bound of the range, you're treating it as if it's going to break out. You're changing your plan. And that changing of a plan will result to something very erroneous. That's why people have a hard time. They let their emotions get into the way. One day it will break out. Or who knows, maybe break down. But the minute it breaks out, your range trading style stops. Now trending momentum comes back into place. Now change your style, be more forceful. And that, unfortunately, is what a trader is going to have to learn how to do. How to switch on range, trade, range, trade. It's not easy, but it's something that you would get when you do it more often. It's like our weather outside. Sometimes it's sunny, sometimes it's rainy. I hate bringing an umbrella with me. Well, what are you going to do? It's raining. You have to adjust. And that's the same adjustment you make as a trader here. Here you have a situation, you have another pattern building. It starts in the building quite wide, and eventually over time it's getting narrower and narrower. So in a condition like that, you also have to make an adjustment. Go ahead, you can buy and sell as long as the range warrants it. If it starts to become too narrow, and you can see it's hard for me to make money, then this is the decision you're going to have to make. One, if you're holding the stock, you ask yourself, am I prepared to hold this in case this takes 1 or 2 or 3 more months? If you're going to say no, take it out. If the range becomes too narrow, you can say either take it out or I'll hold it and I will only get out of this if the low of that pattern will break. But you decide that then. You cannot just be doing that in any point in time. It has to be when that range has narrowed enough because you know you cannot buy and sell and make good money anymore. So let's look at this as a particular example. So here we have a movement of a stock, right? I think this is SSI. Range started wide, becoming a little bit narrow. If you notice the point 1, point 2 of this particular pattern, right? Point 2 is already showing you the range is becoming a little bit narrow. But now the price starts to rush, and it's come closer to that area now. And more likely, as I pointed out earlier on, as the range starts to narrow, that starts to wind up, and it becomes a looming potential to break out of the pattern. And sometimes you might get clues from the area pattern of that pattern as you would look at it. So in a case like this, if it's too narrow, you cannot buy and sell that anymore. If you buy that, you will hold it, and you're going to opt already for a potential breakout there. And you will only sell it if it cracks the low. That's the way to do it. All right? Next, if you're going to buy that and you're going to hold it, please make sure that you put the necessary support stops in place. It is commonly used that the lows of the patterns are used as the stopping points of the transactions. So for example, in this particular case, the lows here is what people normally use. Now it works this way. If I bought this stock here, my stop will be down here. If I bought it on this rally here, my stop will be on the previous low. If I'm buying it here, it will be on this low over here. That's how you choose. Okay? Now, if the lows happen to be very near each other, I'm saying really near, I'm not talking about 3-5% near, I'm talking about very near, then you could use the last low of the 3 set. But if you're talking about a difference of more than, let's say, 1 or 3%, try to use the low closest to you. Okay? All right. Now, once you come around to be able to do that, and let's say that thing breaks support, forget it. I told you, the reason you're buying that stock is no longer there. If that means you're not supposed to be buying the stock and it breaks support, please exit your position. If it leads to the loss, sorry na lang. That's just one out of many trades you're going to have. Put it in. Cherish that as an experience. Or like Lauren said, charge it in because you've just learned something new, and try to learn from that mistake as you move forward. All right. I want you to be able to look at your exercise sheet again. And there's a stock price here. This, by the way, in case you want to know what it is, or maybe I'll tell you what it is later, para wala kayong bias. First question. Would buying the stock at point B be good as a trade? I'm assuming if you're going to buy it at B, you're thinking it will rally to what letter? C. Okay. So that's what we're trying to fathom here. Is it okay for me to buy B with a target of C? Answer? Yes. Why? Well, because if I buy at B, my target is C. What is my risk? My risk is if I buy it at this point and it breaks only this little small part here, I'm going to take a very, very small loss. Right? So my upside is bigger than my downside. That is the type of risk reward you want. It has to be higher than your potential risk. That's what you have to get involved looking for. Would it be right to buy B, placing a stop at point A? So that means, is it okay for me to buy here? And I will only be wrong if this goes below this. So dito kayo bibili. If it falls below A, you get out. Because your argument, oh, kasi the big entire pattern broke already. The right trade would have been wait for it to fall to A, let it bounce, buy it there, and put the stop below A. But buying B is not correct. If you use a stop A, And the reason for that is my upside, which is C, is just equivalent to my downside, which is B to A. So it's lousy risk-reward ratio. So underlyingly, when you're looking at the potential to enter a trade, it's all about trying to say, does this have bigger upside than my risk? And if you have that condition, then that's what you're going to have to learn how to follow. All right. Look at this chart. Question. Is it good trade to enter at point A? When I say A, that means it has to break over A. So again, if you buy A, what are you targeting? B. Okay. And if you buy over A, what will your stop loss be? Where will you put it? Remember, stop loss should be placed at support. So if you're buying at point A, where should you put your cut loss? It cannot be A. It's not support. Where is support? At 1. That's correct. Your support's down here. So buying here, upside B, downside here. So answer? No. 1, my reward is very limited. My downside just become big. And again, this is how you're going to try to make an assessment of a particular pattern. Second question. All right. Which is, notice the word, sensible stop? Assuming we buy near area 1. Do I put it in point 1? Do I put it in letter B, which is point 2 or 3? Or do I put it all the way down 4 or number 5? That way, hindi ako ma-stop out. Answer? B. Remember, I said earlier, if you're looking at the stop price, you want to be able to try to move that stop to an area not so far away from your original, just to be able to give you some leeway to be correct. Because, I know you want to make risk as tight as possible. But let me give you guys good news. You are not the only people in this entire environment who understand technical analysis. There are some people out there who are very crafty individuals. They know what you see. They know where your stop is. 90% of a new trader will put their stop in number 1. Okay? So you know what some of these guys are going to do? I will purposely break point 1 just to get you guys out. And then, ako yung bumibili sa ilalim. And then I will push the stop. After you cut your loss, they buy it, push it, forcing you to buy back your stock, and you will be the one elevating it for them. Right? And you read about something called crocodile trading, and you'll see what I mean. That's where they try to snap you up. So the answer here is, move it to a stop not so far away that has a little allowance. Anyway, that's not a percent, so big a percentage more than the other one. But you know that if those two break, that's something serious going on here. Now, if that were 5-10% lower, please don't do that. Keep it in number 1. But if it's near enough, use the other ones so that you can have some allowance to be correct as well.